So Robinhood, I guess, has just destroyed their platform at this point. Um, I I watched that interview on CNBC last night with the CEO of Robinhood, and it sounds like they needed money. That was, the big thing. They did not have enough liquidity to fill all these orders, and they needed to take out some loans, to exercise some lines of credit in order to stay functioning. I guess because of the massive influx of people coming in to buy GameStop. And I'm sure, well, I can't say this because I don't want to get sued, but it wouldn't shock me if Citadel, behind the scenes was also, if you had Uncle Ken over your shoulder saying, hey, it's probably a good idea to stop selling GameStop. I'm sure that was also part of the influence here, but either way, if they really had to stop slowing things down, they could have done it in a different way. If it was, because the problem is if you're Robinhood, you don't want to reveal that you're short liquidity, that you are illiquid. No one in the financial industry wants to say that, because that's it's a death sentence. That's saying to everyone, hey, you better get your money out while you can because we're bankrupt. And so it's unclear to me how much of this was just the pure cronyism of trying to help out Citadel save Melvin by censoring all of the GameStop bulls from Wall Street bets, and how much of it was just Robinhood almost going broke. Now, the way that things are playing out today kind of seems to me like it's more the Citadel thing, like it's more the angle of Robinhood trying to help out the Wall Street establishment, because yesterday, was very helpful to a lot of these insiders who, had these big short positions on GameStop, because it gave them a day, with the stock coming down a whole lot. It gave them a day to where they could recoup some of their losses and start to unwind those positions. Because remember, to unwind a short position, what you have to do is you have to go back out into the market and buy up that stock. And if you're buying that stock, you want to make sure that you're, if they shorted at $15 a share, and it's at $400 a share, they're losing $385 on every share. And so even if the price comes down to just 200 like it did yesterday, losing $175 a share is a lot better than losing $375 a share. Now, today, Robinhood said that they were going to start letting people trade GameStop again and actually start buying it, because yesterday you could still trade it, you could sell it. And in fact, Robinhood forcefully sold people's GameStop stock, which, to me seems like, you couldn't necessarily call it theft, but that's got to be some kind of crime if you take your client's stock and you sell it at the bottom, and then it shoots back up, and they go to say, oh, gee, good, my GameStop shares are worth $400 again, and then only to realize, no, Robinhood sold your shares at the bottom. That's got to be a big part of the lawsuit that's coming up. I guess it could get added into the lawsuit or be a whole separate lawsuit. But anyway, today people are allowed to buy GameStop again, but they're only allowed to buy 2 shares. That's your limit. You're allowed to buy 2 shares. So Robinhood is clearly still trying to suppress the price, although their power to do so will become quite limited as people flee the platform. So if Zero Hedge had a good point today, that if, based on the interview last night with the CEO of Robinhood, their point in restricting GameStop trading was, liquidity based, and they were trying to preserve their capital, they're going to do more damage to themselves in the long run, because now people will not trust Robinhood, and they're going to flee to other platforms that didn't tell them that they can't buy GameStop. And, maybe if Robinhood had done nothing yesterday, they would have gone bankrupt. I don't know. I was not there. I'm not on their board. I was not in any of the meetings. I'm not the CEO. I don't know what their financial position looked like yesterday. But, it kind of looks like a lose-lose. Webull's CEO, which I believe Webull yesterday did restrict GameStop. Well, today they are not. And their CEO came out and said, no, we don't restrict people from buying certain stocks. That's not what we do here. So I guess maybe Webull will receive an influx of a lot of the the Robin Hooders, the men of the hood. Now, something I touched on the last couple of days, but that I want to reiterate is that, um, unfortunately, a lot of this is devolving into, the excitement over the GameStop rebellion is just evolving into general anti-short seller bigotry, which is terrible because we don't want that. There are almost no shorts left on Wall Street. It's a dying breed. Obviously everyone knows that you just buy stocks because they always go up. Nobody sells. Who knows who these people are who are selling that you're actually buying the shares from? Because nobody sells anything. And the few short sellers that are left, I mean, not that they're having much an effect on the overall market. I mean, look, we're at the S&P's at 3,700 market cap to GDP, as I said earlier. It's hovering around 200%. We need short sellers now more than ever, and I wish. Now I understand that perhaps power-wise, these people are not, they're not capable of that. The retail investors, I don't think, are capable of being able to force the market down, although they should, because from a fundamental basis, these, the average stock on the New York Stock Exchange is incredibly overvalued. The stock market is a joke, and a lot of them recognize that. That's why they call it Wall Street bets. They don't call it investing. Dave Portnoy is not exactly a serious, sophisticated investor. He says right up front, no, I buy stocks because they always go up. And it's infuriating to someone, like me or other people who put some thought into this kind of stuff. But, the fact of the matter is they've been right because the Fed has propped them up. But if these guys really do hate Wall Street as much as they clearly do, I wish I could figure out some way to channel all of that energy into shorting. Your average Wall Street hedge fund is not net short anything, they're net short some things, but overall, they're not net short. They're, net long by a massive margin. So you do, if you really want to destroy Wall Street, destroy the value of their assets. But again, the problem is that the volume, so many of these markets is so massive that the small, a few thousand retail traders couldn't do it. But perhaps you could coordinate certain things. So, like, for example, during Occupy Wall Street, there was a proposal, a very feasible one, that said, everyone, hey, everybody go take your money out of the bank. That's a pretty clear attack on the banks. If everyone who is on board and says, hey, we want to stick it to, to Wall Street, said, hey, I'm not going to let you guys keep my money. I'm going to take my money and do with it what I please. I'm not going to give it to you. I'm going to put it in a small community bank or something. That would have a big difference, or make a big difference. That, in a way, would be, that is like shorting banks. And, of course, these big hedge funds have stakes in the big banks. But, the most potent thing that these guys could do, if they could figure out a way to do it in the modern market, is become modern bond vigilantes. The bond vigilantes were these guys back in the 80s who were pushing up interest rates when the federal government was running big deficits, which, it's kind of hard to think about that now because obviously the federal government has been running bigger and bigger deficits since the 80s, and interest rates have gone, further and further down. And so it might just be that it's not possible to jack up interest rates on the government, and by extension Wall Street, everybody else, because the 10-year U.S. Treasury bond is the benchmark interest rate for the financial markets. If you jack up Treasury yields, you're going to, by shorting them, you're going to increase interest rates throughout the entire financial system, and the whole thing will collapse. That's something that I've been talking about for, years since I started this channel. That is, that's the big one that's coming. Eventually, that's going to happen by hook or by crook, somehow. And again, if the retail investors who are involved in all this, figured out a way to do that, well, I mean, that would be the biggest thing that they could ever pull off. It'd be a lot bigger than just, memeing GameStop to the moon. Because even if you're just able to push up interest rates a little tiny bit, that has a massive negative effect on everybody on Wall Street. So maybe I'll try and study the vigilantes a little bit more and see if there's any way to apply what they did back then to today's market. Because again, it's a very similar spirit. Back then, these were guys saying, "Hey, there are folks using the financial market to do things that are wrong, and we're going to make sure that they're punished for it." And in their case, it was the federal government spending a bunch of crap and running record deficits. But perhaps you couldn't get people on board to do that these days, because the kinds of guys who are, on r/Wall Street bets, they're children of the modern Fed-driven bubbles. They like that stocks always go up, and in fact, all that they're mad about was that GameStop was going down, and they said they don't care about the fundamentals. Stocks are supposed to always go up, no matter what. They should all go up, which, generally speaking, that happens. As I've said, just, look at the stock market. Everything goes up every day. There's a couple things that don't go up, and that's what these guys are mad about. So, maybe their anger is not rooted in anything that I would agree with. Perhaps they're not, the good guys that I would like to think that they are. I guess the jury is still out on that question. So, with that said, I mean, today was another bad day for the major indexes, which I always like to see. But unless it turns into a trend, and I guess before I go, I'll address that. I think it's pretty clear after Wednesday with Powell, the market is not. They're not satisfied with the Fed alone acting. We're going to need more and more stimulus, more MOAR, that kind of more. I guess that $1.9 trillion bill is coming, but even if we get that, that cannot be the last. It seems like a $1 or $2 trillion stimulus bill can get us by a couple of months with the market, and after that, the air starts to come out. And so, if you really wanted to stick it to Wall Street, what you'd have to do is block this stimulus bill from, essentially gut all of the crony corruption and pork from the bill, which is not going to happen. But perhaps if people want to keep up this fight, they need to stand against that bill. They need to stand against all these stimulus bills, because that's what the market has been crying for a long time now. The Fed put expired. It was replaced by government put. This is not a unfamiliar narrative. So there's a lot of potential paths that we could go from here, but I don't see myself being aligned with these kinds of people in terms of thinking. I don't think that necessarily the zeitgeist of this movement jives exactly with my way of thinking. So it's hard for me to predict where they'll go from here. Maybe they'll just keep trying to ramp every shorted asset in existence, like they are right now with Dogecoin. Because at the end of the day, this is a joke to these guys, which, I appreciate that. So if you get anything of value out of this video, I'd appreciate you clicking that like button and sharing this video. And if you haven't already, please do subscribe, because I do upload every day, and I'd hate to have you miss one. So I'll see you folks back here tomorrow.